Welcome to Share Talk, the only podcast where investors come first.
Hello and welcome to the 7th podcast from Market Musings with Fairbairn and Russell. This week we have our third guest on the podcast. This is a man who has over 1 billion of funds under management. He's been an independent financial advisor since 1975 and he's won 17 industry awards. Welcome Alan Steele from Alan Steele Asset Management. Hello Alan.
Hi, hello. How are you doing?
Very well, thank you. How are you?
Very well too.
Good.
Yeah, it's good to talk again, Alan. I think our timing sucks for this podcast because I know you're a big Celtic fan, and Celtic have just kicked off. So hopefully you won't miss too much of the action, and we'll just get on with the podcast.
As long as they're winning, I don't mind.
Right. Okay. Good stuff. No, but it's good to have a Scottish guy on. So I'm glad we got our first Scottish guy on. Got that monkey off my back.
Good. Excellent.
So do you want to start, Alan, by just telling us a little bit about your background, your history, you know, where you've come from and how you've got to where you are today?
Yeah, sure. I'm kind of unusual as an IFA because I didn't have any sales training. My background, my dad was a bricklayer. I was from Bo'ness, which is usually called Dirty Bo'ness. I think that was the football team.
Okay.
And I was there, I've got memories of my granny. I do a thing every month for my clients called Letter from Linlithgow, which was inspired by Alistair, somebody or other's letter from America. And I used to listen to that because I'm old enough to remember radio, and I used to listen to radio a lot. So we do Letter from Linlithgow. And in that, I thought I do a lot of quotes sometimes to make people think, and I quote my granny on my mum's side, Granny Mackay. And when I miss her out, because she had quotes that grannies have, things like, you never know what's in front of your son and all that kind of thing. Grannies are like that; they're fonts of knowledge. And I put quotes in every now and again. And if I miss her out, I get letters from clients with emails saying, "What happened to Granny Mackay?" But it's interesting to take somebody like common sense and apply it. But the family left. Well, I have to tell you, I was born in February 47 in the worst winters in living memory, when a double depression settled over the UK, and for 16 weeks my dad couldn't work because the cement, was frozen and stuff like that. And it's really interesting because that kind of, people forget things like that. So we left Bo'ness. I'm an only child. The double depression obviously affected my mum and dad as well. I never had another one. They saw me and said, "Well, that's enough. We're not having any more." So I was an only child. But we left Bo'ness and emigrated to Linlithgow, which is 3 miles away. And people laugh at that because I always say I've got dual nationality because I'm half Bo'ness, half Linlithgow. But we moved to Linlithgow, which is kind of posh and has a palace and a Mary Queen of Scots and stuff like that, and Linlithgow Rose. So I'm a big fan of Linlithgow Rose. And we went there, and I went to school. And in these days, the school, when you go, I was the only member of the family that went on to kind of 5th and 6th year, and then on to university. And it was a big family because my dad had 8 brothers and sisters, and my mother had something like 7. Wow. And the school was so simple that you had to choose either geography or history. You had to choose either art or science. It was stuff like that. Mm-hmm. And I was very good at geography, and I was very good at maths. And so I decided, I had never heard of things like social anthropology and political economy and philosophy. I was still reading the Beano when I went to university. Yeah. So I go to university, I go to Edinburgh because it's handy, and I do an honours geography degree, but I do maths to 2nd year level. And I qualify, and I'm thinking, what am I going to do next? I didn't fancy doing maths for the rest of my life. I didn't like children, so I wasn't going to be a teacher. And somebody said to me, you should be an actuary. And I said, what's an actuary? I never heard of that. And they said, well, it's somebody that sits in their bum in a room doing calculations, and they get paid a lot of money. And I thought, that's for me. So I convinced the Scottish Widows insurance company that I was the missing link. And I got a job. I started in 1969, and I got a job as a trainee actuary. And very soon I realised I'd made a mistake. I always say that I failed to become an actuary because I failed the medical. I had a sense of humour. I had a sense of humour, and I could actually communicate with people. So I stayed there for a wee while because the money was good. I worked in organisation and methods, and then I left and I joined Scottish Provident as a training manager in 1972. So I was only 25. I think I was the youngest training officer in the whole of the life assurance industry. And I did some work training people and finding a training system. And I started to do work with the salespeople, and I started to look at that. And I realised by the time I got to 26 that that's what I wanted to do. I wanted to advise people on money. And I started in January 73 as an IFA with a company in the Borders in Scotland. And 9 months later, the world came to an end in the October 1973 stock market crash, which I always say was purely coincidence, nothing to do with me. I just happened to be there. And for the next 15 months, the market fell 72%. So just think about that. The FT index fell 72%. And what do? I decide that in the depths of all that blackness in 1975, that I was going to start my own company. And Paul Simon had a song at the time called Still Crazy After All These Years. I was clearly crazy because I was me. My wife couldn't work because she was a teacher, and we had a 6-month-old baby girl. And what do? I go and start my own company, which is madness when you think about it. So the company started in the June, July of 75, and this year we celebrate our 45th anniversary of the company. Yeah. So that's the kind of background. I fell into it. I don't have any economics training. I just, you learn and you look after people. And I think the great thing about our company is I'm from small towns. Bo'ness is a small town. Linlithgow is a small town. And your Granny Mackay drums into you that you do the best with people. And there's a lot of social pressure in a small town because you go into a business and they know you, then you know your mum and dad, and they know your aunties and so on. And I think that's really important because we have built a business which actually looks after people and doesn't use fancy words. We try to find simple ways of describing how best to run, how best to invest your money and avoid tax form properly. So that's the ethos of our wee business. Yeah.
Okay. Well, obviously it was a good decision because you're still here with a successful asset management business.
We employ 40 people now. Yeah.
Oh wow. Oh, okay. Oh, it has grown then. That's massive.
Yeah. Absolutely. Yeah.
And so what did the business initially? What was the offering? Obviously, it's looking after people's finances. How did you sort of start?
Well, I'd worked for 2 years as an IFA, learning the ropes and so on, and I was reasonably intelligent, and I had learned a lot, obviously, working inside a big insurance company. Yeah. Because I'd learned about the investment department and the pensions department and all that kind of thing. And what I think what we did was a bit different. It wasn't just like a stockbroker will just take. Somebody will come in and say, I want a portfolio, and they'll buy some stocks and that's it. Yeah. They will not sit and look at a strategy. They say your tax rate, the tax system, inflation, pensions, that's nothing to do with us. But we give the rounded advice. So we sit down with somebody and say, what would you like to achieve? Would you like financial independence, yes or no? Now, if they say no, we just tell them, well, you may as well just leave, because if you don't want financial independence, I can't help you. Yeah. But once you start from that, what would that feel like? What would it look like? When would you want to have it? Because it's a freedom. And then you start from that and you have the goal. And from there, you work, how best can we do this? What's the tax systems we can use? Where's the freedom? Where's the reliefs and so on? And what kind of investments can we put in there to make that financial independence a reality? And every year we go and we kick their bum and say, right, let's get back what we're doing here. So that's really what we do.
Okay. And is it mostly sort of wealthy individuals or high net worths, or do you work with sort of the ordinary sort of working man?
Well, I'm working class. I'm from a small town.
Yeah.
Originally, what happened is we were taking ordinary people and giving them dreams and delivering these dreams. But as we got more and more successful, and for a long time, I was kind of never out the media. I mean, think of all the newspapers: Sunday Times, Daily Telegraph, Sunday Telegraph, Mail and Sunday, Scotsman, Herald. People started to be attracted to somebody who could actually speak in simple terms and be straightforward and put their head above the parapet, which we've always tended to do. So that attracted more and more clients who had more money. And we have clients now all over the UK and in Jersey, London, Kent, Lincolnshire. We've got them all over the place as well in Scotland. And so we've been kind of the victims of our own success, I suppose. But we still are really, really delighted to take somebody with a small amount of money and say, right, let's make you a millionaire. Huh?
Okay.
That's the real passion of what we do.
Well, that sounds like a dream, doesn't it? Someone come to you and say, yeah, look, I want to be a millionaire, and you help them achieve that.
Yeah.
What would be the sort of starting point then? I mean, do you advise people to go into the stock market or to put money into fixed assets, investments, funds and trusts, that kind of thing?
Yeah, what we are not is we are not stock pickers. That's
okay. Yeah.
We're not a stockbroker. We try to find. Well, I'll tell you what we did actually. It occurred to us after a long time that what we were really doing was we were building a kind of fantasy fund management football team. And people started to get that, because when you go in and you say, right, what's your risk profile, or you start using words of algebra and economic terms, people just get confused. No matter how intelligent, no matter how much money, people like to understand what it's about. So, and it's a football analogy, and even the ladies get this. And I can't use a rugby analogy because it's all back to front. The attacks at the back and the defence is in front, if you see what I mean. So I would go back and say, right, Bill Shankly, right, Brian Clough, Jock Stein, Alec Ferguson, all the great managers. What do they do when they build a football team? They work from the back. They work from defence to get the best goalkeeper they can get their hands on. They then put a defence in front with a best centre half, etc. Then they put a defensive midfielder in front of that, and then they put a striker. Right, they build a spine. And so what we do is we first of all look at where we are in an economic cycle or a business cycle, and we pay a lot of money for the best economic research in the world.
Okay.
And we identified them 20 years ago, and we used them, and they're in the US. And I think last year they won the accolade as the best economic research organization in the world. We use them to give us what the overview looks like in interest rates, where we're going, GDP, all that kind of stuff we put in the background. It's like having a team with. Behind a football team, there are people, experts, health experts and so on, and motivation experts, if you know what I mean. They also have a scouting system that goes out and identifies new talent. So we do that, and then we find the best goalkeepers. And then we find others. These are fund managers that actually specialise in certain things. And the biggest fund we own, by the way, is the goalkeepers. Because people, it's all very well making money for people, but we don't want to score goals behind us. And I used to use Barcelona as an example. I used to say, look, Barcelona football team can score goals for fun, but have you ever noticed they've got a goalkeeper? And by the way, it's not, and I don't mean this disrespectful, but it's not Rob Douglas. It's a goalkeeper it's one of the best goalkeepers in the world. Mm-hmm. And have you noticed that they've got outstanding centre halves? So I used to use that example. And recently I've said to people, what's the difference that's happened in the last 2 years to Liverpool, do you think? And everybody says the same thing. The goalkeeper and Van Dijk. So build from the back. And what that does is at a time like this, that we've got suddenly fear of coronavirus, which is completely overblown, by the way, that has affected the fear of the people out there, the investors are scared. And they're getting that fear pumped at them every minute. And there's a thing in your brain called, it's certainly spelled like amygdala. It's a little, it's a size of like an almond shape in your brain. And that's the panic button of the brain. And it was built over many thousands of years to help people survive.
Yeah.
It's a survival.
Yeah.
Now it's completely useless because we can survive. But that panic button triggers the emotions in the brain. And when somebody makes an emotional decision to buy or sell something, it's a bad decision. And we keep trying to drum that into clients.
Yeah.
But at a moment like this, when the FTSE's fallen by 6% and the S&P 500 in America has fallen by almost 8%, most of our clients are down very little because they have a defence at the back that's not down. Our goalkeeper, for example, has gone slightly up in the last few days.
Yeah, okay.
When the market's fallen, he's gone up. So that kind of, it's just a great idea, and it works.
I like all this football and rugby analogy. It's good because it makes it more understandable, doesn't it? We use it in the business I do, into working sometimes to link things back to sort of a rugby team and how important that is. But you mentioned coronavirus. I wanted to actually mention it on the podcast as well. So your opinion is it's completely overblown, because obviously what we've seen is gold going up, and we've seen the stock markets crash. And it is that emotional thing, as you said, and you should always keep out your emotions when you're dealing with sort of the stock markets, because they're never usually right. But what is your opinion then on? Do you think that Corona will just blow over? It's a very small thing, and also what is your more bigger picture, your more global outlook on the economy, sort of for the next, I don't know, how does it feel now, and for the next sort of 2 or 3 years?
Right. Well, let's go back to something that I discovered. I'm somebody that I read a lot, and I read a lot of disciplines, and I try to keep finding new things and new ideas and new ways of analysing stuff and then explaining it to clients. And many years ago, I came across this expression, and this was about 15 or 20 years ago. I came across this expression called nullius in verba. It's 3 words, nullius in verba. And it's the Latin motto of the Royal Society, founded in 1660, right? And nullius in verba means, basically, don't take their word for it, check for yourself. That's really what nullius in verba. It means don't just accept what the views are. Go and check. Now, let's go back to. I'm not. On Twitter, I'm getting stick because I'm saying coronavirus. Actually, come on, this is overblown, and people are coming back saying, "No, you don't know what you're talking about," and that's fine if that's what they want to do. But we've had this word deadly, 2 words. Deadly pandemic. Yeah, right? It's being spread out. There's deadly pandemic. So I go and think, nullius in verba. Let's go and check what a pandemic is. What is a pandemic? What's the definition of a pandemic? And it's hard to find, but you go in and you Google, and then you get into the World Health Organization's definition. Now, their definition of a pandemic is a worldwide spread of a new virus, which is indiscriminately attacking all age groups, right? That's a pandemic. Yeah. Now let's go back to the facts so far, and the facts are that there's something like 80,000 people in the world that have been affected by this. Yes. Mostly in China. Okay. Yeah. Mostly in China, and then we say, right, okay, how many people have died? And it's estimated at something like 2,500. Yeah, about that. Yeah. What's the population of China? 1.5 billion? Yeah. And only 70,000 people have affected, and only 2,000 odd people. Now, it's sad. I'm not saying it's not. Of course. I'm not being insensitive. I'm just reminding you. And then you look at the official Chinese figures, if you can believe them. The official Chinese figures from the Center of Disease, whatever it's called, will tell you this. This is what it tells you. Under 40-year-olds, the fatality rate is 0.2%. Okay. 40 to 50 is 0.4%. Yeah. And then it goes to 1%. Okay. But here's the kicker. Over 70 is 8% fatality rate. Over 80 is 14.8% fatality rate. Wow. Now, that means that 85% of the over 80s were affected. have actually survived. That also means it's a very small proportion of the entire population.
Yeah.
But what does it tell you? It tells you that the young are not being impacted. This is not a pandemic under the definition of the World Health Organization, because it's not indiscriminately killing any age group.
Yeah.
It is killing older people who are not well.
Yeah.
Right? So I'd say is, look, let's all get back to work, for goodness sake, because if you actually stop all this happening, lock down cities, lock down this, lock down that, and so on, you're going to affect the global, you are going to have an impact on the global trade, and you are going to cause a recession. Yeah. So the quicker we can actually face up to the facts, this is a typical virus that's killing older people. I think, I just think we've got to think about things like that. Now, you actually said, what do we think the economy's what's going to happen?
Yeah.
I think in February, on the 23rd of February 2009, I was the only person that the Daily Telegraph could find that was actually confident that we were heading for a new bull market in stock markets. I was the only person. There was plenty of people who wanted to take the other side, like the world's coming to an end. But I was the only person. And the reason I actually said I was very confident, I gave 7 reasons or something why. And a lot of it was because of the research. And on the 6th of March, the bull market started, 2009, and it's still going on. It's obviously, it's the longest period of growth in terms of stock market performance probably ever. And so it is. So people do get a bit nervous.
Of course.
Because it's been there a long time. But demographics are very important. And I think as far as the world's concerned, and what we would call emerging markets, or what you would call the developing world as opposed to developed world, in that developing world, like Indonesia and India and China, etc., these people are not going to go back to where they were before. They want to educate their children. They want to get better off. They want to have less children. They want to improve themselves. They want to have new fridges. They want cars. You're not going to put that genie back in the box. The other positive thing is that in places like the US, you have the biggest generation. The millennium generation is the biggest. The millennials, the biggest generation has ever been in the US, bigger than the baby boomers. And these are children. These are adults. They're young adults. They have been brought up since birth on the digital economy.
Yeah.
A 2-year-old will pick up an iPhone and have it working.
Yeah.
I've got to ask a 6-year-old how. I remember when one of my granddaughters was 6, and I was giving her a wee story, and she said, "What happened? How did that happen?" and so on. And I says, "I've no idea, and I don't know." And she said, "Google it, Grandad." I didn't even know at the time what Google meant.
Yeah.
So we've got, I think that optimism sounds superficial, pessimism sounds cerebral. If we listen to pessimists, we'd never achieve anything.
Yeah.
All the biggest buildings in the world were built by optimists, not pessimists. All the best businesses in the world were built by optimists. And I think optimism is something that will drive you on. So I'm pretty optimistic. I tend to look at things in a 5-year view rather than a 3-month view or whatever. But I think in 5 years' time, if I'm still alive and we're having this conversation, I would be thinking, you'd be saying, actually, you were right about that. And some of the attackers that we have are strikers, if you want, the people up front, small company specialists and the tech specialists and so on. One of the funds we have exists purely to find tomorrow's winners today.
Yeah.
And that's one of the people we've got in our team. I've got it in my pension fund, and it's done something like 120% in 5 years, which is pretty reasonable. So, I'm pretty confident, and it's best to be confident, because if you're not confident, what's the point?
No, absolutely.
And it's interesting as well when you think about things that inspire. I like to look for quotes to inspire me. And there's a wonderful quote. Ross Perot, if you remember, was a multimillionaire in America. He died a few years ago. He's a wee man. His father was a cotton trader, I think. His name was Gabriel Perot. And Gabriel Perot gave his son at a young age something like 20 quotes for him to think about in his life. And one or two of them are wonderful. And the one that I love best is it says, never forget that a diamond is a lump of coal that stuck to its job.
Yeah.
I like that, because a diamond is a lump of coal that stuck to its job. Another one is the harder you fall, the higher you bounce if you're made of the right material. And we've all had bad times. Yeah. And it's when you fall and you make a mistake and things look black. These are the times that test you. And my granny always used to say that to me as well. You've got to bounce. When you make a mistake, you've got to forget about it and get on with life.
I think what they say in Scotland, Alan, is you need a right good kick in the balls every now and then just to refocus.
Kicking the arse. Well, the thing is, sometimes though, Kenny, if you've been, I went through a very bad time. 93, 4, 5. My marriage broke up. 25 years. It was very uncomfortable. It was bad because the person that broke it up was working with me as a young man, and simultaneously my mother was dying of cancer, and my dad was threatening suicide. So all of a sudden my life fell apart. And in the working class family, you go, give yourself a kick in the arse. Well, the sad thing is, at a time like that, you can't.
Yeah.
Because what's happening is you're heading into a deep depression, and there's a chemical reaction in your brain. Fortunately, somebody that I knew very well spotted it in me and brought me through it. So, there are times that you do fall, and you've just got to get on with it. And she used to say, my granny used to say, what doesn't kill you makes you tougher. Yeah. Which I think is really good. So that's kind of things we do. And there's all sorts of ways of describing things to clients. People don't understand the value of being a contrarian because everybody wants to run with the herd, and the last thing you want to do is be in the herd when things go wrong, and that's how bubbles are created. And it's interesting. So I would say to them, imagine that you're shipwrecked on a desert island or a deserted island. Imagine you're shipwrecked. You wander around the island, there's nobody else there, you're feeling sorry for yourself. You walk along the sand and you stub your toe badly on something that's sticking out the sand. And you pick yourself up and you pull this thing out. It's pretty heavy. And it's a gold ingot. Now, a gold ingot's going to cost you, I don't know, £100,000, something like that, I guess. Mm-hmm. I haven't checked recently. I don't have any. But the question I ask is, you've just got a gold ingot, and the question is, how much were you going to pay for it? And I asked a young man that recently from Stirling University who came to talk to me, asked me help and things like that. And I said to him, how much do you pay for the gold ingot? And he said, nothing. I went, you'll go far. Why are you paying nothing? He says, because there's nobody else there. I went, correct. I said, right, now, it's a bargain, isn't it? He said, oh, absolutely. I said, so if you are with regards to the herd, if there's a herd of people, in regards to the herd, where would you have to be to get a bargain? Would you get a bargain if you were in front of the herd or in the herd or at the back of the herd? Where would you find the bargain? And he said, in front. And I said, right, correct. I said, how do you think it feels when you're in front of the herd and the herd's laughing at you? It's very uncomfortable. So being contrarian is very uncomfortable. If you actually feel comfortable when you're making an investment, the chances are it's the wrong investment.
Yeah.
So you have to feel, and there's a wonderful expression. There's a guy in America called Peter Bernstein who's held in the same esteem as Warren Buffett, old guy. He might not even be alive anymore. I can't remember. But Peter Bernstein, very famous long-term investor. And he came up with uncomfortable diversification. He said, if your portfolio isn't uncomfortably diversified, there's something wrong. So you should always have something in there that you keep looking at thinking, what have I got that for? Because these things are working, but that's not working. And the uncomfortable diversification, if you take my goalkeeper, until now, some people were saying to me, why have I got this? Because it's only doing that, and that one's gone up 30%, and that's only gone up 8%. Why don't we swap them? And I go, because that's the uncomfortable diversification. Because when something comes out of left field and affects the markets, you'll be really glad that you've got that. And of course, that's what's happened today.
Yeah.
Well, not today, but in the last few days. So the goalkeepers have come out on their own in the last few days.
Yep. Well, you've covered a wide range of topics there, Alan, and I've done a bit of research on you. Obviously, you're a bit outspoken in a few things. So we have a 60-second showcase, which is your minute of fame to have a rant or just have a discussion or a pitch about whatever you want. And I believe that you would like to have 60 seconds to talk about the Financial Services Authority. You've got to pick. We're going to give you a letter first. You've got to try and make a long word, Alan. So you're with the letters we give you. So you've got a choice of 2 letters, and the 2 letters we picked earlier on were W and I. Which letter would you like?
I'll take W.
You'll take W, right? So we'll time you, and then Mark will give you sort of 10-second warning, and the platform is yours. You can say whatever you want. So
right.
Whenever you're ready, Alan.
Yeah, just tell me when to go.
On you go.
Yep.
Yeah, right. I've been in business for obviously a long time. I've been giving advice in 73, and until 86, it was a wild, wild west place where people were basically getting ripped off. And what happened was the government at the time created the 86 Financial Services Act, and they created this body called the SIB that was supposed to look after it. And the whole idea of that was to protect investors. They made so many blunders, it was renamed the Financial Services Authority. They were there when the Equitable Life went down that I predicted and so on. They made such a mess of it, it was renamed again the Financial Conduct Authority. But basically, it's the same thing. It's the same people. They've got wrong-headedness. They don't see what it's like from my point of view. They don't see what it's like from the investor's point of view. I wrote to them and said, I think you need to put the media to be accountable. You need to actually start being proactive instead of reactive.
10 seconds.
And so... and they came back and said, no, it's not our job, it's the Treasury. So I would like to see some fresh thinking going in there, and I'd like to see some rebel ideas from people like me. That's what I'd like to see.
Okay. Wrong-headedness, there we go. Do you want to make a note of that, Kenny?
Yeah, I'll make a note of that.
Great, that was good. Well, that's fantastic, Alan. I mean, we've gone on. I think we're sort of over 30 minutes, but I mean, it's fascinating stuff. I mean, you're a very objective person, and clearly you know what you're talking about. I mean, I want to ring you up tomorrow and sort of say, yeah, can you help me get to £1 million? Because you sort of filled me with confidence there and inspired me quite a lot. There's one thing before we wrap this up, if we can do it in a few words.
Sure.
What would you say to a small investor, someone with £1,000 who just wants to get started to try and better their life, increase their wealth? So just an ordinary person who works a normal job, but has got, say, £1,000 to start with. What would be your sort of advice?
Well, depends on the age. What age will it be?
Oh, that's a good question. Well, I'll say my age, like a young, so let's say, late 20s, early 30s, that kind of thing.
Well, the one thing that I've learned over all the years I've been doing this is and if I had my time over again, I would have invested in the small company funds. Because small company funds are where the money is really, really made. And I'd find a good manager and I'd put the money in a decent small company, probably an investment trust. And I'd stick the money in there and I'd shut my eyes and let it roll.
Okay. Great. Okay. That's good advice, I suppose. Where would one sort of start to find these small company or any funds, really?
Well, you talk to somebody like me, don't you?
I thought you might say that.
I mean, I've been doing it for 47 years, and I've made all the mistakes, and I know who the managers are that you would want, and I have a good idea of what we are likely to see over the next 5-10 years. So, that people can come and say, "What would you do if it was you? What would you do?" And or if I were your age. With all your knowledge, what would I do and how would I do it?
Yeah.
And you would put it and you'd wrap it into a nice little tax wrapper called an ISA. You just stick it in an ISA.
Yeah.
In fact, the best thing you could do is probably start putting aside an amount of money that you know you should be putting aside and stick it every month in a nice ISA wrapper in a fund like I've just described.
Yeah.
A small company fund, a micro fund, or a small company tech fund or something like that, and let it go and ignore the pessimists and ignore the headlines.
Yeah.
They're not there to give you advice. They're there to catch your eye, scare you shitless, and sell clickbaits and sell advertising. That's where their job is. That's not my job. My job is to look after you and to take you through that life. That's what my job is.
That's great, Alan. And where can, if people are interested, then where's the best way to get in touch with you? Would be your website, would it?
Yeah, well, the website's actually quite interesting because we put on the website all our letters from Linlithgow, although we only let them roll for 3 months, and any articles that have been in. We also do a section called Letter from America because I've got a big friend in America who's a wonderful, brilliant guy. All that stuff goes on the website. Go through the website, browse through it. If it looks like the kind of thing if we look like the kind of people that you want to work with, and all you do is you send in an email to info@alansteele.com, and somebody will be in touch.
Great. Yeah. So the website, for our listeners, is simply alansteele.com. Yeah.
Aye, well, it's Alan Steele Asset Management. If you Google Alan Steele Asset Management, that'll get you straight. Great.
Well, I mean, that was fascinating. I think one thing we have done today is we've broken the record for the longest podcast, but every second of that has been very, very interesting to me, very informative. How about you, Kenny?
Yeah, it's fantastic. It was really good to get a different perspective. Because from my side of things, I'm mainly into the stock market, so it was nice to hear about, as you call it, old money or real money. I think we said in the phone in the past. So it's great to have you on, and I'm sure we'll probably get some good feedback, and we'll get you on again. Definitely.
Yeah, it would be great to have you on again, Alan. Yeah, I think it's always be something to talk about there.
Well, there's loads of other things I could have mentioned, which I didn't mention. But when I said rebel ideas, I don't know if you picked out these two words up. I said they need rebel ideas. There's this wonderful book by Matthew Syed called Rebel Ideas. It's quite new. Matthew Syed also wrote Black Box Thinking, which is a wonderful book. He wrote Bounce, if you remember. You might recognise that one. Rebel Ideas is a wonderful book, and everybody should read it.
Okay, all right.
So there's a plug for a lovely, lovely book.
A lovely book. Well, yeah, I'll check it out. That's great. Well, thank you very much, Alan, for your time. We really appreciate that.
Thank you for the opportunity.
No problem. It's great. Thanks, Alan.
Right. Thanks, Ken. Bye.
Right. Stop.
Thank you for listening to another podcast from Market Musings with Fairbairn and Russell. As we said, the website for Alan Steele is alansteele.com, and we hope to have him on again in the future. And as he says, coronavirus is nothing to worry about. So let's get back to business, please, and continue making some money.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.